And we're live. Welcome back to another Gimbal Weekly Update. I'm just jumping right in yet again. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical, no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial, member FINRA, SIPC. Investment advice offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial.
Nice.
Good morning, everyone.
That was the best ever. Unbelievable.
Oh, thank you. Well, I had a little hiccup there, but all good. So, good morning, Keith. I think we've seen you. Good morning, Debbie.
Good morning.
And good morning, Doug.
Hello, everybody on your computer.
It's a great Friday. What do we got going on today?
Hey, you know what I learned about Zoom this morning? One of our investment partners, they use Zoom to communicate to several of us. And he was telling us that Zoom is so busy that they can't handle any calls. So their customer service, they can't even do customer service because they're winning so much. And that's just a shift in this world. We've seen a shift where some industries are really gaining traction and then others aren't. Others would love a customer service call, but there are some companies out there that are just so busy that they can't even keep up with the demand. It's a pretty wild time.
I discovered that about a month and a half ago, Doug, when we were supposed to have this Friday morning meeting with everybody. I hadn't renewed our subscription, and I was frantically, like 15 minutes before, trying to figure out how to renew the subscription and couldn't find a human anywhere, but I thankfully was able to get my brain working and figure it out. But yeah, that's an interesting problem to have where you're growing that rapidly.
Well, and their technology has made the complex simple. And there's a company out there, Cisco, and they've been a great company for years. I can remember when I first started in the late 90s in this business, that was one of the stocks to own, Cisco. And they have a similar platform to Zoom, but it's not gaining traction because they didn't make it as easy to get on and to use. But they'll probably pick up their phone right now.
There you go. There you go. That's funny. Well, Amanda, what do we need to know?
I have a couple things before we jump into the markets, if that's all right. But a shameless plug, if you guys have been keeping up on our Facebook page and on the website, Keith and I have been doing a little mini series on a Zoom webinar talking about Keith's observations from the road. And so I think our final one with just the two of us for now, with your most recent trip, is going to be posted next week. And we talk a lot about witnessing change out there. And I know this time in the world and in our lives, there's been a lot of change. Like Zoom doesn't have great customer service because they can't, because it's changing and they've got so many calls coming in. But yeah, take a peek at that and let us know if you'd be interested in hearing anything else.
Yeah, like the change of Zoom's customer service, I would say if anybody out there is watching is looking for a job, I would probably shoot my resume to Zoom, right? They probably need somebody.
They need them.
So you just have to start paying attention to those things around you, and you can really take advantage of those situations.
Totally.
I think there's a lot of great opportunities to jump in and get creative right now. And, even if you're looking for a part-time job, if you're just fresh out of college, or if you just retired from somewhere that you didn't like, I think now is a great time to focus in on some of the even leisure activities. I know we've talked about them on this call, but gosh, I would think that any of these companies that are about having fun would be hiring right now. And you might just be the person to give them that extra spark to keep it going.
I talked to one of our clients this week who's 85, and she is packing food boxes for a church. They aren't making her lift them, but she's having a great time doing that. So doesn't matter how old you are, there's things you can find to do.
That's great.
I talked to one of our 18-year-old clients this week that signed up to be one of the food deliverers for one of the food delivery companies. It's not Grubhub, but who's the other one?
DoorDash.
DoorDash. Yeah. So an 18-year-old could work for DoorDash and have his own gig. So that's pretty crazy.
And you know, that 18-year-old, if you're trying to build up your resume, the original food delivery company is looking for people. Meals on Wheels needs people to help out right now. You know, a lot of folks, they're not getting out like they used to. And so, you know, if you're looking to pad your resume and use it to get into college with some community service, that Meals on Wheels experience might be a really good one for you.
So is this too early to talk about the Meals on Wheels opportunity at Gimbal Financial next month, or are we going to bring that up next week?
I think that's a beautiful segue.
We just created it yesterday, so let's bring it out.
Amanda, do we have a date?
We have a rough timeline. We're thinking about doing it over a week's time, maybe a 10 to 2 kind of deal. We want it to be comfortable for everyone, safe, and but we also want to provide, and we want to be able to serve you and kind of show off our new space. So more details to come for sure, but there's a creative way we're planning on doing this. It should be mid-September.
That'll be our open house.
Does our chef know that he's going to be grilling, or?
I gave him a specific date, so I'll have to let him know we might be needing him a couple extra days. But
hey, the main thing we want to do is, yes, we're in a new location. We've got a fresh start, and really life is good over here. But the main thing we want to do is celebrate you. We've been talking about it this week. So thankful that you're helping us keep our lights on at our homes and allowing us to do what we love to do. But we really do want to celebrate you. So Keith had this idea of the open house where, you know, I was thinking, oh, COVID, I don't know if we should do this or not. But Keith, he took it creatively. He must have taken a marketing class in college or something. But we are really looking forward to celebrating you. So just stay tuned to this show, Facebook announcements. We'll give you some details, but we're going to land a really good time in September.
That'll be fun. Well, what about the market, Doug? What do we need to know about that?
Golly, well, you kind of changed gears on me.
Sorry, man. I don't want to. Got to keep this thing moving, man. This is.
No, I was looking. When we talk about the markets, this has been a real education for me over the years. You know, I can remember in college when I'd hear about the stock market, I'd think about the Dow Jones. Dow Jones is just 30 stocks. That's it. 30 stocks can't represent what's going on in America and across the oceans. And so when we talk about the markets, we like to talk about several areas of the marketplace where there's buyers and sellers exchanging ideas. One person is optimistic on one side, the other person is saying, I am entering protection mode. And so that's happening all day long. And you know, this week, I think we've started to see some change in the marketplace. We started to see some of the stocks that were really doing well, like the biotechs, start to give up some steam, where the semiconductors still have been rocking. We started to see some of the commodity sectors that, you know, like gold and silver. We talked about last week how silver was the #1 performer. Well, it gave up quite a bit of steam early on this week. And so one of the things that is a constant theme in the marketplace is just stuff changes. And you don't have to be afraid of it because you're not married to this stuff. Keith used to tell me all the time, I like telephone stocks. I thought, well, yeah, I know we got a lot of AT&T clients. but what he's talking about was not AT&T, SBC, Verizon. What he's talking about is give me my money, call me up, give me my money, liquidity. And so you don't have to stay married to these ideas. We don't have to own biotechs forever. We don't have to own gold or silver forever. So I'm starting to see some rotation is what I'm getting at. And that's a real positive thing.
Rotation meaning that the market spins around and what was in favor maybe isn't in favor, and what wasn't in favor is maybe getting some attention now.
Yeah, exactly. You know, the NASDAQ has been on such an amazing run. This type of run has just been unbelievable for the NASDAQ. I don't remember a time where there wasn't pullbacks. Now, I know we've got a few days on the calendar now where it's shown some weakness, and we're paying attention to those for your money. But compared to the S&P 500 or the Dow Jones, boy, those tech stocks, healthcare stocks, biotech stocks, they've been rocking.
Yeah, they have. I was kind of reviewing some of the things we talked about in the past. One of our shows a few weeks ago, we put an ETF up there to explain why maybe utilities aren't getting as much interest as they are now. And I'm not going to mention it again because I might go out and buy it. I'm not recommending it. But whatever that ETF was that was talking about, different forms of energy was probably up 10% since we talked about it a couple of weeks ago. And the utilities still haven't really done much since we talked about it. Traditional utilities.
Yeah, and one of the screeners we do for you all is we look at we look at individual stocks, and we try and see what are these stocks telling us about the marketplace. And when I look at some of the top individual stocks right now, there are things like you've talked about before, Keith. You talked about wind, you talked about solar, these types of things that are cutting edge, opposite of utilities, traditional utilities. They're really gaining some traction. And so we're not saying go out and buy those right now, but it is interesting how there's opportunities. And my guess is someday we'll be back in the utilities, and it'll be great.
Well, I enjoy capitalism a lot. It's hurtful to people at times, and yet at the same time, it's helpful at the same time. And we've all been hit by each side of that thing. And yet it's probably one of the most powerful engines of change out there. And so locking our ideas into the things of the past can sometimes get us hurt. Like, the good old days are today. And I know we all have fond memories of days gone by, but the great days are today and what's going on today and tomorrow. And so capitalism is really harsh, is that if those sorts of energies are going to be the future, which I don't know for sure whether they are or not, and the old ways aren't, people may cling to those old stocks and cling, and all of a sudden they find out they have less value in their hand than they did 5, 10, 15 years ago. I mentioned, AT&T has been very kind to a lot of our clients, but I just mentioned how that stock peaked out 20 years ago and has not ever come close to where it was 20 years ago, and doesn't appear to be going in that direction at all. And so sometimes with change, you got to kind of just learn to let go of those things and thoughts and ideas of the past and try to look at the new ideas, which admittedly, I understand how it's harder to grasp the new because it's comfortable to enjoy the things that were, but it also, I think it keeps me younger grasping the new ideas.
Yeah, it keeps us in touch with people. And, speaking of holding on, you had asked me before the show, to mention my worst performing investment. I had to think, I've never had one of those.
I didn't word it that way, Doug. I said, what was your worst investment? I didn't have to even be performing. So.
Well, mine happened to be both.
Okay.
But holding on to the past, there was a company I really liked. I actually still like their stuff. Caroline and I, we've got boys who are growing. We've got 4 of them. And I think I'm the only one who still likes to wear Quicksilver wakeboard shorts. I love a pair of Quicksilver shorts. And none of my boys have asked about those. And these guys are much cooler than me. And so one of the risks that you can take on with stock ownership is when you try and buy something that you like to buy yourself. I was given that advice. Hey, buy stuff that you use, like Coke or whatever, Starbucks. But that's not necessarily great advice. So I bought I bought some stock in Quicksilver not that long ago, probably 5 years ago. And I thought, this is discounted deep. This is going places. And so I bought it and performed terribly. And my emotions were in, this is going to come back and all this stuff. But let me tell you why it was the worst stock I ever bought. The result really was bad. but the reason why it was the worst stock I ever bought is because I didn't pay attention to the fundamentals on it. I had no stop loss for myself. I had no exit strategy. And that's what really made it the worst investment for me personally. In the last couple of weeks, I bought a stock that I really love their company. But this time I had a stop loss on it and I hit it and I had to get out of it. And I hated to, but with the marketplace, you have to play with the tools that the market gives you. You can't play with just, oh, I've had a good experience wearing these board shorts. And you all know that, but playing with the tools that the market gives you is critically important.
Yeah, I asked that question of you, and I'll answer it too, because anybody that's ever led somebody or managed somebody knows that other people don't like to be told you're wrong. Doug, you're wrong, right? Like, what's your initial response to that? Is to defend, like, no, I am right, right? That's the natural response to it. And the beauty, if you call it beauty of capitalism in the stock market, is it tells you when you're wrong all the time, and you can argue and make excuses, and it's just going to keep punching you in the face until you either agree or just ride it out to where its natural end is. And so it's, my opinion doesn't really matter when I'm wrong. And it's hard. It's like in relationships when you're communicating people and you were wrong, to say I was wrong. A lot of times that's the cause of divorces. It's cause of all kinds of split person friendships and things like that, is to say I'm wrong. And the market's the most pure communicator of when you are wrong and right that I know of. I just don't know of any other thing that it does it that fast. It's like, huh, I could argue, but it's much bigger than me and doesn't really have an opinion about my opinion. And that's, I found that to be a really healthy thing for life, like, because it's hard to accept clear, honest communication in relationships, and it's hard to give it. And because I think of that old video of honey badger, the market's like honey badger, it just doesn't care what you think. It's just gonna do what it's gonna do, and you can cling to your thoughts and opinions and they're gonna go. So mine was 1991. I was a much younger version of myself then. I was much more confident in myself then, and I had this stock that the stock symbol is KOSM. And the only person I bought it for was for my mom, because I knew it was going to make her a lot of money. And I had all these ambitious ideas about how smart I was and all this stuff. And within a matter of days, and I noticed Quicksilver shares this same letter in its personality. In a matter of days, that KOSM became cosmic and got a Q on the end of it. A Q means, normally, for some reason, the NASDAQ ETF is QQQ, but which is kind of peculiar they choose that. Historically, if a stock symbol gets a Q on the end of it, it means it's bankrupt. And so KOSM went to KOSMQ, and the investment went to zero.
Q's and Z's. You got to watch out for the Q's and Z's.
Yeah. And how about that? Tucking your head down and go, hey, Mom, you know that money you had? What do you mean had, Keith? And so the market can be a real humbling thing, but also I like to call those things the University of Wall Street, because you can ignore that you made a mistake, or you can learn from those things and not repeat them so often. And I mean, it's impossible to be right in the market. And so those people that we're helping, we are using years and years of experience, training, and education to help you. But in that process, there's going to be mistakes that we just didn't foresee, but we have the wisdom, I think, at this point in our careers to recognize those a lot sooner than later.
Well, and one of our friends, he recently posted his batting average, meaning how many positive experience trades has he had and how many times has he lost money. And this is just since April. And he was about 50%. But his returns were very good. And so one of the things that you can do to help you is just know the risk. Know the risk that you're getting into, know the downside. And I was looking through several of our trades over the last 10 years when you asked the question. And I think one of our best trades, looking back, has been Exxon. We lost money on it. You lost money on it if you were invested with us. We had a floor on it, and we sold it for an 8% loss. And when I look at where Exxon is today, I am so thankful that we took that 8% loss. We've had several others that have even hit triple-digit plus returns. But when you see something hit your stop and you execute on it, that's a very good trade. And that's something you want to repeat over and over and over again. And as you experience that, your portfolios will do well.
Yeah, the inverse of that question is, what's your best investment? And I had a Israeli technology stock that came to my mind, and it literally doubled within a few days of when I bought it. And I got out at a pretty good price on that, and that's what first came to my mind. But then when I thought back about it, it wasn't a very thoughtful trade. I didn't really have a long-term strategy on that trade, so I just got lucky. And I think using discipline on any trade is much better than getting lucky, because if you get lucky, you can't repeat that. And that means if you try to repeat something you got lucky at, you're probably going to lose money using the same systems to invest your resources.
Yeah, so you could have a 7 or 8% gain, and that'd be your best trade for the entire year. If you're able to stack up a couple of those together, you do pretty well.
Yeah, and so I think this conversation is really healthy because I know for me, there's a perception early on when I got in my career that I was going to be right for clients a lot. Nobody really talked about the psychology of managing other people's money on their behalf, and that's a very complicated thing. I don't know that we really talk about with clients very often, but it takes a lot of perseverance, tenacity, wisdom, emotional strength to manage somebody else's resources or to advise them, and then to make a mistake with my own money is one thing, but to make a mistake for somebody else's money is a lot harder than you could ever explain to another person unless they've done it. And it's really easy to make money. Like when you make money for somebody else, that's really easy. Right? Because look what we did. To lose money for somebody else, that's why I think we get paid, is to learn to lose money properly rather than let things just die on the vine. But that probably doesn't sell very well to people. If you're like, what are you talking about? That if we pay you to lose money, but that's where we earn our keep, is when we recognize we've made a mistake, I think.
Yeah, well, marketplace today, everybody out there, just, I think we are in a bit of a rotation, like I said, and I think we could even see some sideways patterns where your statements might not be rocketing up, but seeing a little sideways movement, that's okay. Marketplace needs to do that, needs to rest. And really what companies are trying to figure out right now, like I mentioned Cisco earlier, they announced this week with earnings, they're trying to figure out what the future is going to look like. So many companies are trying to say, what is this going to look like? And for many, unfortunately, the only thing they can do is cut expenses. And so you're going to see some of that. You're going to see expenses being cut. And then you're also going to see companies like Zoom, where they're going to have to invest. They're going to have to spend some money. They're going to have to hire some people. They're going to have to ramp up technologies. And so it's like every time in the marketplace, business is always changing. It's dynamic. And so just keep your eyes out. And if you see some new technologies that you like, or some new ways of doing living in 2020, we want to hear about them. Let us know what's working for you. I know this Zoom call has been great for me personally. I've enjoyed doing the webinar and meeting with you online. And so, yeah, keep us up to date with what you're using too.
Yeah, one of the curious things, and why like investors that might be watching today can't just go out and buy Zoom, is sometimes if you mismanage success, all of a sudden within a short period of time you have a big failure. Like when you're growing at a very rapid pace, it's really difficult to make the right decision. Some companies historically have done well. Like if you were fortunate enough to buy Microsoft in the mid 1980s and they grew for a decade at a very, very fast pace, they just made a lot of right decisions. But if we went back in history and found other companies back in there, I can think of some that come to mind that had the same possibilities, but they don't exist anymore because when that rapid growth hit, they started having problems. Customer service dropped off. The problems, they couldn't get them addressed fast enough. And that's the risk point where Zoom as a business is today, because Cisco knows they're getting their bell rung. And so Cisco has the opportunity to say, how can we take advantage of Zoom's lack of customer service right now? How can we step up and fill the gap and market to those people? And so that's just competition. It's beautiful.
And I imagine every leader of these companies, she's got an MBA from Harvard or Princeton or something like that, and they're all just really smart people. Matter of fact, we probably like all of them, but it doesn't mean that they're going to have any success. Yeah. The market just has, like you started the call earlier, it is going to give you an honest, straight up feedback without the personality. And so that's something we're staying tuned more than anything. It's just, what is the market trying to tell us?
We have a calendar on our refrigerator that we use one of those photography websites on, and every month it'll celebrate somebody. This month it's celebrating me, and I just walked up to the refrigerator a couple days ago and looked at the photos on there, and they had them from 4-year-old version of Keith all the way up to the modern version of Keith. But Caleb, who's 18, a senior in high school, was pointing out the attire I was wearing as an 18-year-old and telling me how uncool my attire was then. And I think that's a great lesson, is that just like Quicksilver was a really hip happening thing at one point in time, what you think is cool may not be so cool anymore in the future. And to stay relevant takes some energy and some time. And that's not only talking about on the investment side or the wardrobe side or whatever. As financial advisors, we have to spend a lot of time staying relevant in the way that we provide services to you through Amanda and Debbie, how we keep up with tax laws and other things like that. And so, if we didn't stay on top of things, we could be telling you the old styles of how to do things versus the modern possibilities with the changes in the tax laws and legislation that's gone through even in the last few months.
And how to adapt. That's been a big theme of ours as well. With all this change and everything, we've had to be quick to adapt. And like he said, he probably would not be wearing that collared shirt if he didn't adapt to some of the trends that were going throughout his life. So, Doug, were you going to say something?
Well, before you put away your Bureau cream or whatever that stuff was called, yeah, I want to throw this out. I think we talked about this maybe a month ago, but now it's time, crunch time here. If you know kids who are going back to school, college, or they're going off to somewhere, I want to remind you to think about the conversation of having a power of attorney document and a healthcare power of attorney document. It could come in a real pinch where you could use that document to help them if something were to happen. You'd be able to listen to the doctor, hear their advice, and give some direction. And so that healthcare power of attorney document and power of attorney document, really important right now for your college age kids. And if you need help with that, we've got a great referral source. It's not one where we exchange any money or anything like that. We just trust this person very much. He is a friend, and he's come through for many of us. So if you need an introduction to someone who can help you with that, please call any of us here, and we'll be happy to make that for you.
As we help you with those thoughts, I have some ideas on how to save you somewhere between $150 and $400 an hour that I'll maybe go into more details next week, that talks about the kind of the planning process and where you might fit in a attorney in that process. And we have multiple attorney referrals we can always offer up if for some reason you need a variety of people you want to interview. We are not limited in our access to either CPAs or attorneys as we help you in the future. What else,
Sounds
Amanda,
great.
Debbie, you guys have anything else we need to know?
I think that's about time.
Yeah, I think that's good.
Hey, are we, is next week Mike Kinghorn Day? Are we going to do this on Mike Kinghorn Day and we can talk about that next week?
Yeah, I think it's going to be a little shorter, but we can explain Mike Kinghorn Day next week. So tune in.
All right. See y'all soon.
Take care.
Bye, everybody.